Good morning, good morning, good morning. It is finally the final trading session of April. It's April 28th, Friday. Thank Fook. This month is going to be gone. Yesterday was just absolutely insane. I've been doing this for 27 years. I've been very focused with the group for a little bit more than 10 years, and I have never witnessed what I witnessed yesterday. Never seen that in over 10 years. The bounce after Brexit was about as close as I can recall, and even having sat there for about an hour yesterday tracking back and looking back, never seen it. Never. Range great, 63. Biggest range day that we've had since we hit 3909 back on March 24th. Biggest intraday range, 19-point gap up, 79 points above the previous close. We're green on the month, and having closed last week down 3.65 points to end a 5 consecutive green week run, I'll tell you right now, we are at risk, without a shadow of a doubt. We are at risk of closing above 41.35, 41.32, 41.33, 41.35. We are undoubtedly at risk that that could take place today. There is an ability with right now, I'll tell you, the puts and call ratio is about 0.1. So meaning there's 9 calls for every one put. And they have a opportunity here today that they could squeeze the QQQ once again, and I'll show you in a minute, for just a fractional little bit more to the upside. We'll go over that. But what the Bulls need, or what the Bears need, what a bearish need is a drop below 41.15 and a hold below 41.15. If the SPX can get below that 41.15, there is an opportunity that there could be a stronger move to the downside down below 4100. But that is your line in the sand, is at 41.15. And I'll bring it over here really quick. I threw out very early in the week that, having this been a 50-50 week to start out with, the SPY calls and puts, because we were looking for range expansion. We've been stuck here. And this was going back onto, end of the day Monday. We're looking for at least another 150 points, and we only got 20. So I had the SPY 420 calls out there and the SPY 404 puts out there in the email. 404 puts paid a little bit more than $2 on Thursday or Wednesday. The chat room posted out that 410 call, 420 call option on Wednesday. 410 calls, a little bit more than 50%, and again, as a hedge. But on Wednesday, when I started this, after we had that SPX minus 1%, I've gone back and tracked 5 years when we had these extremely long streaks of my not getting the minus 1%. And when the minus 1% eventually showed, all of the conditions prior are always 2 out of 3 sessions, 3 out of 4 sessions, 2 out of 4 sessions. There's a consecutive run of minus 1% declines. Yesterday, blew out the upside safe edge calculation, blew out three times the implied move of the day. And that's what I mean. I've not seen that move ever. And that's what we got yesterday. Broke above plus 1%, 2 days ago, having minus 1%. What you're hearing in the background there is the tick strike. And again, coming back to where we were going into Wednesday, mentioning that we were at 200 extension because I'd typically seen that being a very strong move to the downside wave, and that's exactly what we wound up getting. I'll go on to the charts in a minute. And again, leaving it very well open that we could still be in the bullish alternative, with the bullish alternative pointing well up into the mid 4200s. very, very early to start predicting futures like that we're breaking out and going up there. Next week we've got the FOMC meeting. Next week we have Apple. The market moves where Apple moves. So again, this being the coverage that I was looking back on prior not getting a -1% run and what would take place afterwards. And again, us getting just that one -1% day and calling it done. I'm not out here trying to base theories and everything on data alone. The data only supports what the charts support. And again, that's where it's all coming down to. But come in here real quick. I'm not going to waste your time on Friday. Here is Amazon and that enormous, oh my God, Amazon. And here we are. It's gapping down. Closed at 109.82, currently trading at 108. This is what Facebook should have done, and it didn't. Microsoft. So here we are in the VIX. Obviously got this gap VIX from when it had that gap up on the SPX on Thursday, and that is unfilled. And we have a fractional little gap from overnight over here on the VIX. So something to, again, consider. The VIX has been the thorn in everybody's kneecaps. But again, coming over to the SPX, here we are with our wave. And here is our 200 extension at 40.55, came down to 40.49 into the end of the day on Wednesday, gap up, and then just this, call it whatever you want to call it. But right back to that magic 41.36 line. And come over here onto the QQQ with a very zoomed out view to show you what's going on and where we've been. All of these in white are your full moons, and your full moon is coming next week on May 5th. Now, when we track the full moons, we talk about plus or minus 3 sessions. So, plus or minus, that falls in range with the FOMC meeting next week, and it also falls in range with Apple. And as you can see with all of these full moons, they tend to very strongly line up with where a top or a bottom are. But what I'm zoomed out for mainly is this right here, this August 22nd gap down that had not been filled from August 22. It's to 322.87. And we come over here onto where we're at right now. And in that, I got to go back and put on the extended hours. And overnight, we went over there and we hit that 322.80. That was right off of the Amazon report. So not completely filled because it didn't fill during regular trading session, but definitely one of those ones where today they could re-squeeze this back up there, how we came right to that 200 extension to the upside, and how you can see over here on the downside, fractionally missed that 200 extension to the downside. So everything's lined up that was going quite well. You've got two major gaps over here on QQQ from this week alone. But this move that took place yesterday, every now and then you are going to get punched in the face. It's going to happen. Yesterday was one of those days, and yesterday will eventually, it will clear itself out. But what took place yesterday, looking at that from a 1 minute point of view alone, that right there, you just don't see when you have nothing but horrible data coming out 8:30 in the morning, right after that horrible GDP, not a great jobs report, Facebook revenues 20% lower than the year before, blah, 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 blah. And all you do is just grind up to the upside yesterday. Call it what you want. Go back and be a hindsight trader. It is what it is, but you can see a number of indicators that are all over the place saying what took place here yesterday was as fake as a pair of titties on a stripper in South Beach. Have a fantastic morning. I'll be doing one-on-one calls with everybody during the course of today. Over the weekend, anybody who wants to, message me in the chat room. Then we'll get on the phone, start going through it. A lot of you guys with Glacier, with the IPO, I need to speak with you. I need to get emails from you. So I'll send an email out to you over the weekend, maybe later on today. We'll all get in touch and start moving forward. Have a great Friday morning. Motherfucker, man. Van Halen 5150 was the wrong idea. I should have put Ozzy Osbourne Crazy Train.